Alright, so we're going into part 2 of the course, division 2, that's the tape reading part. And for that, you have to understand the tape reading chart. Now, I'm not sure if I'm going to use this a lot because it's very easy to trade right off of the wave chart. But he mentions to learn this. Like, it's a fine, learn it. Anyway, so the tape reading chart. It is 25 years since I first began to forecast moves of the market by its own action, and it is one thing to learn, and it's quite another to teach other people to learn. And the easiest way for me to teach and for you to learn tape reading is by means of the tape reading chart. This chart combines the three vital factors, price, volume, and time, in such a way that the trader can see at a glance just what certain stock is doing and how it acts on rallies and reactions, the values of each trade, the volume of each trade, the progress of the advance and declines, the proportion of rallies and reactions to previous swings, the lines of supply and demand. So this is what you're looking for: the progress of the advances and the declines. Meaning progress, how do you determine progress? Is just, okay, it's going higher, the thrust is going higher, the closes are higher, etc. So higher highs, that's basically price progress. Alright, the proportion of rallies and declines to previous swings is just the pullback, measuring the pullback. The lines of supply and demand, that's your cause, across a level. So you see that cause is being built across a base. So that's the line of supply and demand. The best location, the stop orders, and when to move stops and how far. This chart, in fact, combines on one page most of the indications required by the tape reader. It can be kept on a sheet of paper, You're supposed to use it with a wave chart of 5 liters, the Wyckoff wave, but you can use it with the S&P. So you have a wave chart of the S&P or the NASDAQ, and then you can use a tape reading chart of the actual stock that you're trading. Or you could just have a tape reading chart of the ES and the wave chart of the ES. Alright. It can be kept on the same sheet so that complete picture of the market may be combined with the tape reading chart. If several individual stocks are charted on separate sheets in this form, the wave chart can be recorded on a sheet of transparent paper, half this size and laid over. Okay. Alright. So what is the construction? This is an important point right here. It's just point and figure. That's how it works. If we have a one box reversal, you go down one, and instead of going up one in the same column, you move to the right. Anyway. Alright, so I'm going to start working on this, and you might just want to follow along. Alright. So, where the hell is it? So this is that one stock, JI case. Alright, and one more. There's some questions always, okay, he did every tick. Do you have to do every tick? Obviously, you have to modify the chart today for, the price and the volatility is different, totally different. So just do that. Like, it's the same concepts, but instead of having 1/8 quarter point or 1/8 point, you might have 10 cent, not 10, but probably like a 20 cent box on the SPY, you know. So that can easily be done. In fact, I'll go into those examples later. But the idea is you're just applying the same thing here onto a modified tape reading chart for today. Remember, this is a point and figure chart. Alright? So today, you also just need a point and figure chart. What's the difference? Instead of X's and O's, he has the volume in him. That's it. Alright, so recording of this case, total 900 shares at 40. So let's zoom in a bit. So you got 900 shares at 40 even right there. Okay. You can see the circle is 9. This 900 might have been made up of several lots. So long as the sales continue at that price, they were added together and recorded all at once when the price changed. Not until then do you know that there will be no more sales at that price. So whether it's large lot, little lot, who cares? So long as the volume is building at that price, it just continues until it moves up one or down one. Alright. The next sale is 100 at 40 and a quarter. So what happens here? It skips 40 and 1/8 and goes to 40 and 2/8. Alright, and these are in hundreds, so you put 1 to represent 100. As there were no sales at 40 at 1/8, a cipher of 0, there's a 0 at that level, and the figure is entered on the blah blah blah. Now you have 3 figures in the first column: 9, 0, and 1. 9, 0, and 1. Good, it's not 911, but 9, 0, and 1, meaning 900 traded at 40, 0 traded at 1, and 100 traded at 40 and 2/8. The next sale is 40 and 1/8, only 100 shares. That's this one right here. And 1 on the 1/4 level. And 200 back down at 40. These 2 figures must go in the second column, as the first column is filled on these 2 levels. Okay, so again, in a point figure, right, you got 901, but now you have 100 traded 1 box lower. Okay, so the last price here is 100 traded at 40 and 2/8, but then you had 100 traded at 40 and 1/8. So what happens? You have to go down 1. So you go down 1 and put a 1. It's all done for you, by the way, so by your software. Then 200 at 40 and 3/8. No, this is 40, so that's already done. 40 and 3/8 is right up here. Okay, so 200 is traded 40 and 3/8. Then 100 at 40 and 1/2, so that's this one. No sales at 5/8, so that's why there's a 0, right? A total of 2100 at 40 and 3/4. So you know this is important. How do you know? It's the fucking biggest one there. So you have 9 at the open, 900, but up here you have 40 and 6/8 and 2100. So that is a very significant number, relatively speaking. It's the biggest print in 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 prints in that day, right? 200 at 41 even, and then none at 41 and 1/8, so you put a 0, and then 200 at 41 and 2/8, which is 41 and 1/2. That's this print right here, and then another 200 at 41 and 3/8. So all he's doing is just, all these items were recorded in the third column because the advance continued straight up without going a point back, without going 1/8 back. Okay, the next transaction is 100 at 41. So it went all the way back down to 41 and skipped all of this. So after it went to 41 and 3/8 and traded 200 shares there, after that it went all the way down and skipped two prints here was 0, 0 and traded 41 at 41 100 shares. Okay, we must enter 0 at those two areas because nothing traded. Next sale is 100 at 41 and 1/8. Should be 141 1/8, and after that 100 at 41. With that explanation as to how to keep the chart of this kind, which is really a 1/8 point figure chart. That's all it is. So how do you make a 1/8 point figure chart? You don't make a 1/8 point figure chart. He's making a 1/8 point figure chart. Alright, now if you want to, you could do that by just modifying the box size. So how is that done? So all he's doing is 1 divided by 8 equals this. So your box size, if you're doing a point figure, is 0.125 by 1. Okay, 125 by 1. So that's 1/8. So let me see if I give an example. Alright, so this is a point figure chart of ExxonMobil, and it's difficult to do 1/8, like it's 12.5, but you can do 12 or 13. Sometimes that software won't allow you to break it to 12.5 because I don't know why. But I don't see any issue with doing 12. And also for higher price stocks, I don't see an issue with increasing the box size. See no reason why it would be. There's no reason, because box size is relative to volatility. So the point is, it needs to follow what he's saying. It needs to follow the rules of point and figure. But I've seen like order flow done in all types of charts. This is just one style. So over here you see all of that, right? So the same thing that he's covering can be applied today. Same thing. Principles can be applied today. The only difference is, like over here on his chart, he has 40 and 1 whatever, 40. Okay, he starts at 40 even, 900 shares, and then once all the trading is done at 40, when it goes to 1/8, he moves it up. So it's not like you have one tick at 40, then one tick at 40 and 2/8, that's not what it is. Alright, so let's put this away. As you can see, like, let's just prove this point, because there are folks who claim that it's tick by tick and goes up and down. Yeah, it is tick by tick, but it doesn't mean you have to write or plot tick by tick, meaning, you know, for every single tick. The software does that for you within the boxes. Anyway, I don't want to harbor too much mental energy on that, so let's move forward. Okay. Where was I? Okay, so I just start right here. I will proceed with the instruction as to how this chart should be used in actual trading and forecasting. Oh, by the way, regarding point and figure charts with volume or any other chart, like, I'm still of the opinion any chart can be used, because I've seen this used on, seen these approaches used on like all types of candle with bid ask, delta, all that. So again, the point is get an order flow chart and apply the principles on it so you can understand the dynamics of supply and demand. This right here is just a very old method, but it's, I mean, you have all these studies on it. So even if you're doing other methods, they should be fairly the same. The form should be different in terms of the charts, but the principles like pressure and all that should be the same. Anyway, on January 19th, case opens at 40. Our position is neutral. We wish to make a trade on either the long or the short side as soon as the stock shows a tendency. So here's a most important point here, is he's ready to trade the open based on tendency. What is meant by tendency, and how is tendency a trigger, a signal to trade? Let us assume that the indications on the wave chart soon after this are bullish, but we wish to wait until the stock itself has given some sign of definite tendency. The second point here is that the wave chart is telling you it's doing something, you're going up or down, but you want the stock to also give the same tendency, give the same signal. There may be an opening bulge, but this may not be the true direction, so we shall wait until indications are definite enough to promise a worthwhile swing. This is also something you see today, where you have a stock bounce at the open and then just drop. We allow 1.5 a point for commission and taxes, so it is best not to go into a trade that does not promise to yield 3 to 5 points. And this is another point, like when he says 3 to 5 points, you better have a stock that has good range intraday. Otherwise, this method will be used to enter a stock for a multi-day trade instead of an intraday trade. Because 3 to 5 points in that day when he's describing it wasn't necessarily an intraday trade. The 3 to 5 point could easily be a swing. If we had the background of the previous trading day, we would know better just where the stock stands, but from scratch we must wait until the stock tells us what it is probably going to be before make a commitment. Now the point here is that these things don't just like, the open is not just a starting point. A lot of time the open is a continuation of yesterday. In learning to read these charts, it is best to cover with a sheet of paper. And I was just telling you how to study, meaning, use a sheet, use a ruler. Alright, so after the open, 900 shares at 40. So you see that already traded up here. The tape shows 140.41. Did I do this already? Okay. Anyway, so he's doing it again. 900 shares at 40. The tape shows 100 at 40.41. 100 at 1/8. That's the one at 901. 200 at 40. That's right here, 40 and 1/8, and then 200. 200 at 43/8. Okay. So he's going back and just going over all of this, and he's up to this point where you have 2100. Okay, then 200 at 41, 200 at this, and then 200 at that. A rise of 1 3/8 from the open. Alright, so all he's saying, this rally that has occurred on the open goes $1 and 3/8 points. The reaction recorded by 100 shares at 41. Now he's taking a look at the pullback. So he looked at one rally so far. Now he's looking at one reaction. So you have 100 here. One and 3/8. So what he's saying is that you have 100 shares selling at 41. Marks for the present. One sec. Alright, that's better. Okay, so the reaction recorded by 100 shares selling at 41. So it dropped two ciphers, 0, 0, and then 1. Okay, marks for the present, the boundary line of that trading range of 1 3/8 for the day so far. Okay, so what does that mean? So the rally is from, he just identified the trading range as the top and the bottom of the rally, nothing else. He looks at it, okay, it rallied, alright, put two lines there or something, because that's the trading range. And why is that the trading range? Because you finally have a reaction. We do not wish to take a position until the stock clearly indicates that it is going out of that range. You see? We do not. That's your criteria. To trade within the range, it might not give us enough room to turn around in and pay. To trade within it might not give us enough room. Because trade in a small range is fucked up, because it's a small range. Like if you get in here, like if I trade this range, and I say, oh, over here, let me take the short. I have 1, 2, 3, 4, 5, 6, 7, maximum 7/8 of a point. Is that enough? When my risk is going to be 1, 2, 3, probably one more, 4. 4/8 of a point. 4/8 of a point to make 7/8 of a point? No, it's not. So to trade within it doesn't give us enough room. All right. And in his day, he had all the commissions were like, I don't know, like $100 or something. Next, the tape records 100 at 41 and 1/8, 100 at 41, and 300 at 41 and 1/8. All right, so 41 and 1/8, you have 41 and 1/8 right there. 100 at 41 right there, and 300, which is right there at 41 and 1/8, and then 341. So 300 at 41 and 1/8 again, then 100 at 41 and 1/4. That's that print right up there. 200 at 41 and 1/8, and 100 at 41 and 1/4. The trading range has narrowed. Alright, so we have a rally, we have a reaction. So let's just draw some lines. Alright. Oh fuck. Alright. So the range has narrowed to 1/4 of a point. There's the whole first shit. Alright. So we noticed that we're not going to play the range. We're waiting for a breakout. Alright. So next the tape records 100. I think I did this or didn't do this. 1 and 2. 41 and 1/8. 241 and an eighth right there, and then 141 and a quarter right up here. Then after that he says the range has narrowed. So narrow range. Now what? We are still in doubt. Next sale is 1,000 at 40 and 3/4. Right there. So from the narrow range here, it went down and traded 1,000. A sign of weakness. Why is this a sign of weakness? That's what we gotta figure out. That right there is 1,000 shares traded. But why is it a sign of weakness? Because there were no sales between 41 and a quarter and 41 and 3/4. Because there are no sales. Zeros on top of it. So here there are no sales. So no sales here, followed by that heavy price print, is a sign of weakness. Why? It's a thin market. Followed by heavy selling. Alright. Next, 900 at 40 and 5/8. Right there's that print, 9 right there. 800 at 40 and a half. 500 at whatever, and 300 at a quarter. What? Quarter should be 500 at 3/8, and then 300 at 1/4. Oh yeah, 1/4 right there. There's a 3. Alright, those sales total 3,500 shares. Here's an important point. He's looking at volume. Histogram volume right here. Okay. So on that chart you need to have volume. Right there, 3,500 shares, all taken within the range of 40 and 3/4 and 40 and a quarter. Here is some strength. but it may only means temporary support. Those sales, the total of 3,500 shares. I don't know where. I think I skipped something. Okay, so 40 and 3/4, which is in this cluster here, there's a lot of trading. So above it is a thin market followed by heavy trading below it. Alright, all taken within the range of this. Here is some strength, but it means only temporary support. The chart must tell us what the insiders are trying to do with their stock. Are they supporting it because they want to sell at higher prices? Or do they really want to acquire a lot of stock? So again, the question comes, how is this support? Right? Because said first that there's a thin market at top, then there's a sign of weakness, then there's heavy selling totaling 3,500 shares, and he's saying that this is strength. Okay, so there's a little bit of confusion there, but let's see what he says. Or do they want to acquire a lot of stock? Maybe they're taking it down to buy it. They take 900 at 40 and a half. Yeah, 40 and a half. 1, 2, 3, 4. Right there. They take 900, making 4,400 around that level. So now he's looking at it sideways, I think. So 9, 4,400. How do you get 4,400? 9, 8, and 1. Yeah, I think he's just adding the entire range. Like he's taking the 3,500 of this area and then adding 900. So he's looking at a cluster, making around 4,400 around that range, not that level. Then 300 at 40 and 5/8, that's right above it. And 300 at 40 at 7/8, that's right above here. Then 300 at 40 and 5/8. Did I just do that one? Yeah, I did that. 40 at 7/8. Then 1,000 at 41. So remember, they dropped 1,000. Now it's like they're buying it back, maybe, I don't know. Then 1,000 at 41, which is right there. That is 6,000 shares on the way down to 40 and a half and up to 41. So now he's looking at that entire drive down and then that drive up. Alright, so it was a thin market. He drove it down, then is driving it back up. Reminds me of a shakeout. Alright. That does not look like buying for the sake of accumulation. If they really wanted this stock, they would not have bid up for it. So over here you see a bidding up for it at 1,000 at a higher level. They would have put it down. So here's our indication that the pool is trying to sell and not buy. Bidding up for it. They drove it down, drove it back up. Now notice, like, this is just what he thinks. Now he's waiting for the market to tell him if that's the case. The bidding up process, the bidding up proceeds. 400 at 41 and an eighth, 600, 1400 at the top, right there on a breakout. This is a new higher day. Artificial bulge. All right. It required 8,400 shares to be taken in order to advance the stock 1.25 points. This is not bullish because of the way they did it. Therefore bearish. Now why is it? Because they drove it down and drove it up. And I think it's really because the print right here is the biggest print. Like, you don't accumulate at the top, you accumulate here. Okay, so that could be an indication. Now someone may look at this, say that they absorb this area, but if that's the case, there's no follow through. So what does that mean? That means it's selling the high. That's the way I read it. Unless the stock goes on upward, meaning follow through, and its volume increases, we are looking for a chance to go short. Alright, so they would not have they would have brought it down if they were accumulating. So he's saying that they're not. Alright. Also note that some of the stuff won't become clearer until the whole course goes through, because some things he just doesn't explain in his studies, but he'll explain it as a point in a later study. So that's just his style. So you had 400, then I forgot where it was. 41 and 1/8. 400, 600. So I went over this 400, 600, then 1400 at the top. That print is very high. Made an artificial bulge to attract outside buying. It required 8,400 shares to be taken in order to advance the stock 1.25 point. So we'll take a look at this. And it advanced 1.25 point. This is not bullish because of the way they did it, therefore bearish unless the stock goes upward and its volume increases. We are looking for a chance to go short. Bottom line, it took a lot of volume to advance it, and it went up 1. And a lot of volume actually came up on that. So I'm just thinking about something, the ratio of the top print to the entire volume. I think that that would be interesting, because why it would identify that that most of the churn is happening at the top. Then it records 700 and 400 here, and the rise is checked. The pool is trying to sell, for the tape says 800 and then 100. 800 and then 100 right there. This is a halfway reaction. So here you have way back. We're halfway back, following the bulge. This reaction confirms the checking of the rise. So that reaction there confirms what? The checking of the rise. We might as well just put something there to indicate that it is resistance. And narrows the trading range to 5/8, between 40 and 7/8, which is right here. And 41.5. We should go with the stock when it goes out of that range. It always says that. That is, we should sell it short on a bulge, endeavoring to get as high price as possible so as to keep our risk down. Remember that we are trading now with a half to 1 point stop, and it would be better to lose opportunities because there are plenty of them than to be so eager to trade with high risk. So it's better to lose an opportunity, meaning get rid of the FOMO, let it go, than to risk a lot. There is a rally of 3/8 on a single 100 shares. 3/8, 100. So that's 3/8. Where's this? Yeah, these are 3/8. 1, 2, 3. 3/8 on 100 shares. It looks like a markup by a specialist or an odd lot buying to even up. Yeah, I don't know how to interpret that. It's just fucking, it's nothing. It's just, another 100 at 41 1/8. So I'll write that down. It might come odd lot even up. Another 100, then 600, then stock is heavy. Is it heavy? I guess it's heavy. So I think heavy, he means the opposite of a thin market. So after that you have 1,000 at 7/8, 200 and 100 low volume. I don't understand how you're saying decreasing volume when you have 1,000. So the prior one had 7, 6, 13, 1400. Now it has 10, 11, 12, 1300. But he's saying it's low volume. Here we give an order to sell as we get 41 for it. What? The low volume, he's... Okay. Like I said, some of these points will be later. Stop is at 42. That S is the stop, by the way. The black S right there is the stop. So you have about 1 point risk because you get 41 for it, so 42 you're out. $300 shares more are sold at that price, making it 400. That's the 4. Followed by 100 and 800 down. Now that shows stock is getting heavy again. The chart now has a slap downward formation made by several lowering tops, lower highs. A rally to 41 and a quarter occurs on light volume. 41 and 2/8. Must be this. Someone else tries to sell, gets 300 for it, right there. Followed by 100 right here. The quarter point rally, which follows at 41 and an eighth, is the weakest yet. 41 and an eighth. So I think he's talking about this quarter point. The 1/8 rally. That right there makes your lower low. Level. And sudden bidding up of prices right there. It looks artificial, particularly when a quick slump follows. Quick slump. Artificial. Okay. So why is this artificial? Because of that quick slump. Now observe the 1/8 point rally. Alright. It's right there. Low. Another weak rally up to 41. At the lower high. And then the real slump begins. Okay, so, oh shit, I went over a lot. Alright, so I'm going to stop right here. Please note that all of this stuff that I'm doing, this is all part of what needs to be done to really absorb the material, because his work is very, it needs to be worked through because it's quite dry. And if you can follow along, just do the same thing. Alright, thanks.